If you are not wired to be an entrepreneur, I don't think you should do this.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello, welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, excited to have Bruce Petersen. Bruce, how are you doing today?
I'm great, man. How are you?
I'm doing excellent. A little bit about Bruce. He is the apartment guy. He's the best-selling author, speaker, educator, and syndicator of commercial multifamily properties throughout Central Texas and Tennessee. Bruce targets assets in dynamic markets from stabilized to totally vacant and everything in between where there's a strong value-add component or stable cash flow. A little bit more, he's was awarded the Austin Apartment Association's Independent Rental Owner of the Year in 2016, the National Apartment Association's Independent Rental Owner of the Year in 2017, as well as Think Realty's Multifamily Investor of the Year in 2019. So you guys are not listening to some slouch here. This guy has got it going on. He's been doing some great things in the space. He's also been featured by Million Acres, Forbes, Entrepreneur, and Business Insider, and is the owner and founder of streetversity.com. So with that said, Bruce, give our listeners a bit more about your background, and then we'll dive into what you're focused on today.
So in the space that we play in, I guess my story is not totally uncommon, but it shocks people still that, I'm a college dropout. My parents were high school dropouts. The formal education thing didn't work for me. I was the first,
Congrats,
as I said. Well, thank you. But I was the first person in my family to graduate high school. But then I went to college because you're supposed to go to college. It's 1986. I'm 53. But back in 1986, well, that's what you had to do. It was just kind of ingrained into us. It was the dogma of the time. And so I went to college. Shit, I barely got out of high school. I don't know why I'm going to college. It was a disaster. I failed out. I hated it. To use weird buzzwords, I'm a lifelong learner, but I do not do well in a structured environment. It drives me nuts. It bores me to tears. So, I dropped out of college, and without a college degree, I fell into retail. I did retail for almost 20 years, and I thought I liked retail because I was, feeding myself the same lie that everybody in retail feeds themselves, or very many people. Oh, I like people, therefore I like retail. I liked retail until I hated retail. The last year or two, I was working 80 to 110 hour weeks. Didn't have a family, didn't have a girlfriend, no pet, nothing. What can you have when you're working 100-hour weeks? And, I'm 5'8", I was 240 pounds. So I was lonely. I'll admit all this in hindsight. I was lonely. I was depressed as hell. I hated my life. I was terribly unhealthy, and I thought, you know what, this shit's going to kill me. So I just quit. I just walked in at 42 years old, put my keys on my boss's desk, said, dude, I'm gone. So I put all my stuff in. I was renting everywhere I went because I got moved around constantly in retail. So I was renting. I put all my stuff in storage, and I packed up a rental car and drove around the eastern half of the United States for about a month to a month and a half, just trying to decompress and find myself. What am I going to do now that I'm an adult? I'm a grown up now, but I don't know what the hell I want to do. Went and bought a house out in the suburbs of Austin in a golf course community. I listened to Dave Ramsey. I paid cash for it because I was very miserly with my money. I saved it. I invested it well in the stock market, averaged 12 to 15% returns a year. So I was doing pretty well. But I paid cash for the house, paid cash for my car. Then I found real estate. And I realized by listening to a mentor, that's all broke-minded stuff. Dave Ramsey is good. Susie Ormond, they're good if you're financially broken. Not broke, but broken. Well, I wasn't financially broken. I listened to my mentor. I sold my house that I paid cash for because I don't have a job anymore. Nobody will give me a loan to get the equity out. So I sold my house in this golf club community, and I moved into an apartment complex. And my friends are like, what are you doing? You're going backwards. Like, I believe. How old are you when you in this path? I'm 42. Okay. So I was like, I believe in this path. So just watch. You have a family, you can't do what I'm doing. I get it. If I die or if I fall over financially, don't do what I'm doing. But so, it's the best thing I've ever done. I make, and not to make it about numbers, but numbers give you more flexibility in life and more options.
Yeah.
I make 15 times what I used to make. My net worth has gone up 30 times. It's a whole different world. I'm an entrepreneur now. I'm in control of my own schedule and destiny to a degree, right? So, I've been doing it for 10 years now. I started in 2011 with my education, bought my first property in 2012. It's the best thing I've ever done. It's financially rewarding. It's emotionally rewarding by helping others. I get to provide investment for other people, jobs for other people, and places to live for other people. So, man, I love everything I'm doing now.
That's great. That's great. What a story though. 42 years old. You're working. What did you do in retail?
So I was a big box store manager. My last job was with Bed Bath and Beyond. I was a store manager, and I was next in line at one point to be the next district manager. I was getting close to another promotion. I was like, guys, I can't do this shit anymore. Like I said, I was physically nauseated every day I went to work. I was starting to get short with customers, and I liked customers, but now I'm getting short with them. I went on vacation, went to catch a couple of Rockies games. I'm a baseball fan. I came back from that 1 week off and thought, oh, wow, that's the first vacation I've ever taken that didn't recharge my batteries. My batteries were still drained. So I was like, I got to figure this out. I have nobody depending upon me but me. If I end up under a bridge, which I had a fair amount of money, but I knew that the risk that for most people that I was about to take, if I ended up under a bridge, it was just me. So I had to make a change and take a risk by the traditional metrics and thought processes. And again, getting me out of a miserable situation that I hated, it changed my life.
Yeah. I think you said you're 5'8" and 246. You don't look like you're 246 anymore.
No, I lost 100 pounds of fat. I got myself down to 159 at my lowest. That math isn't 100 pounds, but if you figure I was adding weight because I was working with, adding muscle, I was working with a trainer. So that tells me I lost roughly 100 pounds of fat. I just cleaned myself up. I got to where I wasn't depressed. I didn't hate my life. I found a trainer. I found a wife in real estate, which was fantastic. So now I have a full family. It's, again, I wasn't afraid to step away and basically start over.
Yeah. Yeah. It sounds like it was more of a, the real estate, it just by what you did, it was more of just a change. I need a change and I'm going to take control of my life versus where you were at before, just letting life run you. It sounds like, is that accurate?
Oh yeah, that's absolutely right. That's the thing I didn't, I'm wired as an entrepreneur. I think looking back on it now, I've got that rebel streak in me that I don't like to be told what to do.
Yeah.
My wife hates that about me, obviously, but my joke with everybody to try to explain exactly how my brain works. If you tell me not to light myself on fire, even though I know I might die, I'll light myself on fire because you told me I shouldn't.
Yep.
That's who I am. That does not work in corporate America. I am not PC. I am not HR friendly. I stayed in trouble with HR. I've got a salty tongue, right? I say some curse words. The name of my book is Syndicating is a Bitch. That doesn't fly well in a very structured culture. So now I'm in charge of culture. I have multiple companies, and it's my job to set culture in a safe way that people can be who they are truly, but still get things accomplished and be respectful of each other.
I like that you tell this story and you're 42 years old when you had this kind of like, this is ridiculous. I'm done. I'm just, stuck in this job. Most people that talk to me and tell me their story, they started in their job, if they had a job, and they worked for a couple of years, but by the time they were 30 or maybe even earlier, they had started the real estate journey, right? But it just shows that it doesn't matter what age you're at, 42, 32, 22, you can still do it. And I have talked to a few people that are even 50 in their 50s and 60s that transition, but it's nice to hear from people that are a little bit older. Cause I know I've got listeners that are sitting here going, yeah, but man, it just like, I'm already at a certain age, and can I really do it at that age? And it shows that, yeah, you can.
Well, a lot of people think it's too late for me. I missed it. I didn't take. Guys, wake the hell up.
Yeah.
You are 50s, even if you're 60 or 70 years old. I firmly believe most of us alive today are going to live to be 100.
Yeah.
If you're in your 30s or 40s, you're probably going to live to be 110, 120. You got all kinds of time.
Yeah,
Quit
lots of
thinking
time.
about the traditional timeline of our lives. We're not going to retire at 65 and then just hope to make it another 5 or 10 years on our savings before we die. It's not the way our lives are going anymore.
Right.
If you retire at 65, you damn well better have 40 years of shit saved, or I don't know what to tell you.
Yep.
You're going to be living on family members, the government, because you're not going to be able to take care of yourselves.
Yeah.
And people are still saving, if they're saving at all, they're still saving for that 65 and then die by 75. Not going to happen.
Not going to happen. Well, and if it does, well, congrats, you planned it, but man, I mean,
but that's not a good plan.
It's not a great plan. And what happens if you do live to 90 or 100?
Exactly.
Now you're sitting here going, oh crap, what did I just do? And, I was, somebody asked me the other day, like, well, what would I need if I wanted to retire at 65? And I'm like, well, what kind of lifestyle? So we talked about it. And I did the calculation. I'm like, look, if you're going to live to 90 to 100, you're going to need like $3 to $4 million to live the life you want to live. Like, where are you at?
Yeah. And you see the eyes.
Yeah.
So I coach people quite a bit. And that's one of my first questions, okay, you're asking me to how to do real estate, and you're asking me how, where, how big, what's your number? What are you trying to get from this? What's your number? They're like, what do you mean? What's my number?
Yeah.
And you'd be surprised. You probably wouldn't. It sounds like you had these conversations. How many people don't know what their number is? And by your number, I mean, for you to walk away from the life that many of you hate, what does that take monthly in income? Figuring that a lot of your income now is going to be tax advantaged, but still, you got to have a baseline number. How do you know how to get somewhere if you don't know where you're trying to get in the first place?
Yeah.
And, I taught a class the other day about, just how to underwrite. Well, no, it wasn't the underwriting class. It was the lending class. I had a good buddy of mine, Hans Box, come in and talk to my group about, multifamily and commercial lending. And you're talking about, some of the foundational stuff. You need a bio and you need a PFS. I said, hey, hang on. I want to interject. I apologize, Hans, but how many people in here have a PFS? Half the room didn't even know what it was.
How many people didn't even know what that means, right?
Yeah, half that didn't know what it was, maybe 30 to 40% of them actually had one. I'm like, forget about commercial real estate. Forget about trying to get a loan. How do you not know your financial wherewithal? How do you not have a balance sheet for yourself? Yeah. People don't, it's a lack of financial literacy at every single level. It's not just that maybe you're saving in the wrong vehicle or doing the wrong thing here. People don't even know what they're worth. And that's the foundational base of all of it to me.
Yeah, that's a good point. I mean, you need to understand, lots of good points there, right? You need to understand where you're going, what you actually want to achieve. Like, if you're going to go down a journey and take some risks, like, what are you actually trying to achieve? And then what do you need to do? Like, a lot of people want to quit their job. Okay, what's that look like? Or I want financial freedom. What's financial freedom look like? What's your number? Like you said, like, what is your number? I haven't thought about that. Well, start thinking about it. Like, you need to understand. And then where are you at right now? Like, most people don't have a clue. So love it. So Bruce, you got this book. What's the title of the book? You already said, right? What is it?
Syndicating is a bitch.
And so why? Why that title? And explain to me a little bit.
Because I've been to lots of conferences, expos, and all these things where people on stage are, hey, join us and you'll be rich yesterday.
Yeah.
I listened to a guru out of the Dallas area at a conference that I spoke at about 3 months ago. And he went up before me and he said, hey, how many people have heard in this room that, people around them say my income or my net worth or whatever your metric is, went up 10x during COVID? Everybody raises their hand. He goes, well, you know what? They weren't passive investors. They were active investors. They were sponsors. They were syndicators. I could teach you how to do that. It's only $300 million trillion. People get into these rooms and they hear people at the front of the room telling them this is what they've got to do. And if they do, they're going to be worth $10 million tomorrow. Well, I'm worth $13 today. That math is not going to work for you. I'm sorry. You could be that at some point.
Yeah.
It's like a Tony Robbins event. You get swept up in this fervor and this emotion. You write somebody a $20,000 to $40,000 check because you hear all the success stories. They parade their students across the stage that, oh my God, he changed my life. And then you leave the conference and you start digging in a month, 2, 3, 4 months down the road. You go, holy shit, this is hard. They didn't tell you how hard it was. They told you how easy it was or how anybody can do this. And both of those statements are wrong to me. It's not easy. It's really hard. And not anybody can do this. If you are not wired to be an entrepreneur, I don't think you should do this. There's other things you can do. So I was tired of people not lying on stage. They're good people with good programs, but they're not giving you the full truth. It is lucrative. It does work, but it's going to be a shit ton of hard work. It's going to be stressful. I've cried. I've had sleepless nights. We've had employees die. We've had residents die. We've had, the big freeze in February here in Austin. Things are going to happen. I've been sued. Most people aren't ready for that. And again, it's okay. There's nothing wrong with that, but understand what this is. So I wrote the book to pull the curtain back. This is every single step you need to do your own syndication. I put it all there. It's not a teaser book. Oh, here's just enough to show you that, you can do it too, but you got to reach out to me and give me 20 grand. No, for $20, the price of a book, I lay the whole thing out, but I tell you some stories along the way. Are you sure you want to really do this? You get to chapter 6. You still with me? So I keep doing that all through the book with scary stories, just trying to give you the reality of it all. So when you get to the end of the book, if you decide, look, man, this was eye-opening, it's not really for me. Good. I think everybody should do this if they're cut out to do this. But if I can save somebody, not just the $20,000 to $40,000 loss, but the emotional toll it's going to take on you, the brain damage you're going to sustain doing this. I love it. Not everybody loves it. That's why I wrote the book.
I like it. It cuts. It sounds like you cut out a lot of the BS. You're right. I mean, a lot of these books, and especially when you hear the people that are up on stage and they're parading around telling you how easy it is and how you can become a millionaire and we will all be able to do what we want and when we want and with who we want and how we want and all this kind of stuff. And it's like that's all true, right? But like you said, you have to be wired for it. You have to be driven for it. It's not everybody. There's plenty of people that will try it and will fail for many different reasons, by the way. And so I love that you tell some of those stories. It's not the sexy way to write a book, right? The sexy way is to tell people how glamorous it is and how, you're building this $1 million fortune and you'll never have a problem in your world ever again. But it sounds like you say, no, not so fast. You can do this if you want to, but here's the reality. Are you sure you want to do this? Because once you start, you're taking other people's money, which is wildly important to be a good steward of their money. And yeah, so I love that idea. And talk about the sleepless nights. I don't know about you, but man, COVID hit and these moratoriums happened, and
Yep.
we had a property. I had two properties actually, or kind of sister properties. And we had 75% occupancy because we were doing a major lift on them.
Okay.
We just got done renovating 30 units in one of the properties, 30 out of 120. No, sorry. I think it was both the buildings. So 30 out of the 204. So they're all vacant. And then all this happened. And I'm like, crap, I'm done. Like, I got to rent these units out. I'm screwed. Like, and they're not going to rent because it's COVID, I mean, I remember looking at my wife. I'm like, well,
you ready to start over?
it's going to be a bumpy ride here. We'll hold on, And the same people think about the people during the Great Recession, I mean, same thing. Like being an entrepreneur, it's a fun journey. if you're cut out for it, it's not always easy.
Right. So, people a lot of times say, well, I'll have a third party property management company, so I won't have to deal with all.
Yeah. Good luck.
Okay. So you're not going to have to deal with the day to day with the residents,
Yeah.
but you are the deal sponsor. You're probably the asset manager. You have to go communicate to your 10 to maybe 100 or 200 investors. Those regular every 3 month distributions that you were used to getting? Yep. Well, why do you ask? Because they ain't coming. Like, well, what do you mean? I need them. Guys, I don't know when I'm going to be able to send out another distribution. We're still profitable. We're stacking the money, basically. It's retained earnings. It's still in the company. But like you said, all the moratoriums.
Yeah.
Facebook was crawling with threats of rent strike by all these different people that don't get the way economics works. So that was going on out there. The government stepped in, said you can't kick anybody out. Fannie Mae, Freddie Mac, they're GSEs. They say you can't kick anybody out. You can't charge late fees. So I'm thinking there's no incentive for anybody to ever pay me again in their lives. They'll just ride this out and they'll just leave when it's over, when I can afford to, when I'm allowed to evict them for non-payment of rent. Well, they're like, oh, well, I lived here for a year without having to pay. So kick me out. No, I don't care. I mean, you're never going to get money from me.
Saved $20,000. Right?
Exactly. And for our residents, $20,000, that's life-changing. Right. So I was like, look, guys, I don't know what to expect. Will anybody pay me rent again? I can't send money out in this environment until I have a better understanding of where we are and what's going to happen. So I had to tell people it was either a 2 or 3 quarter period where we didn't send out distributions.
Yeah.
Of my 300 active investors at the time, about 4 of them called me in a panic. I'm like, I can't help you, man. I'm sorry. I have to protect the financial well-being of the company.
Yep.
Not you as an individual, because all 300 of you are different individuals.
Yep.
Whatever I do for one, I have to do for all. And frankly, Mr. or Mrs. Investor, what I'm hearing from you and your sense of panic, and I understand, and I'm so sorry you're going through this. But if I do get into a situation where we have to do a cash call, well, you're telling me by your actions, you cannot participate. Well, if that happens, we're going to lose the property. And now we've lost all of our money. So yeah, that's part of it. That, okay, you might have a property management company, but you still have to be the voice to the investors, calm their nerves. So it's tough.
Yeah. Yeah. It's not hand the keys over and then, just start collecting the paycheck. That's not what you're doing as the general, the lead sponsor. So certainly a lot of work and, you're still dealing with the property manager, you're still dealing with a lot of choices that happen on the properties and there's certainly plenty to do. Bruce, what's a mistake that you've made on this journey and how can our listeners learn from it?
So a mistake, basic things. My very first property, with my first property, I don't really know what I'm doing. I'm leaning on a coach, and the coach that I used was fantastic. She was super qualified, super successful, but I didn't know to really look at the structural integrity of a bathtub. As crazy as that sounds, people are like, what? How is that one of your? Well, let me tell you, you buy a 30 to 40-year-old asset. Some people are buying 50-year-old assets now, built in the early 70s, late 60s. You have a plastic or a fiberglass bathtub, 40 to 50 to 60 years of stepping in that bathtub, that thing starts to flex a little bit. You can't tell, but it's flexing. Over time, it will lose its structural integrity and it'll spring a leak. I didn't know when you have those little plastic mats in the bottom of the bathtub, you need to lift those up and look under. You need to really pay attention to those bathtubs. So I didn't know to do that. So in a 48 unit, my first purchase, I had 4 or 5 bathtubs fail. And almost, I think 4 out of the 5 were upstairs, of course. So now upstairs, that affects the unit downstairs.
Yep.
When the first one happened, a lady comes running into the office and screaming in Spanish to my property manager. And we went running into her unit because she was talking about it's raining in my unit. I'm like, what the hell do you mean it's raining in your unit? The roof is there. So we walk in, sure enough, it's raining on her vanity. I'm like, what the hell's going on? So we go upstairs. Then the maintenance guy walks in with us, goes up and talks to the resident, looks in the bathroom. There's a quarter-size hole in the bottom of the bathtub. Like, well, why didn't you let us know about this? no, it's okay. I just put my toe in it. I'm like, oh my God. So that, $50 to $150 patch, it cost me $1,000 to $2,000 every time because it went to the bottom unit. It destroyed a lot of sheetrock. I had to pull all the tub surrounds down and retile those. It was just a mess. So that was one of the biggest things I learned, that, that put a kink on a 48 unit. If I have to spend $2,000 to rip out and reinstall things, that's a lot of my cash flow, right? Because I'm getting roughly back then $200 per unit per month in free cash flow. Well, hell, that's 5 months worth of cash flow for one unit. So yeah, that was one of the bigger mistakes that I made. But we've made hiring issues. We've had people steal from us. We find it pretty quickly and we get them out, right? So you hire enough people, eventually somebody's going to get over on you. So we've had that kind of stuff happen. But that's probably the biggest mistake I've made.
Yeah, proper due diligence, and thinking about all the little things, which, like you said, who thinks of a bathtub? And those little plastic mat or little suction cup mats are the worst thing that you can ever put on a bathtub, as that just holds that water and it really ruins the bathtub. So, well, that's crazy story. And it, like you said, of course, it happened on the upper level,
Of course, if it had happened on the ground floor, it wouldn't have been that big a deal. Right, but so, well, we learn and we move on. It didn't ruin us. It did put a hit on our returns for a little while, but I owned it as a first time.
Was that a syndication?
Yeah, I've only syndicated. That's all I've ever done. That's all but I had to own it to my investors, and that was the property that was causing me. I cried a couple of times because I knew I was not performing. I was not hitting my projections. And when I kind of bared my soul, I said, my wife can, corroborate this, that this is happening and I'm not sleeping and I'm sorry. I'm not, they kind of in unison together said, look, it's okay. We knew we were investing in somebody with no experience. You're doing what needs to be done to fix it. You're communicating the problem to us, and you're telling us what you're going to do to make sure it's not going to happen again. So that's the thing. We're all going to have issues. We're all going to struggle. If you do enough of these deals, you're going to have a deal that doesn't go the way you think it's going to go. It's just, there's no way around it. It's going to happen. It's a forgiving enough industry. As long as you buy with enough margin of safety, don't over leverage yourself, get out in front of issues, explain them away, you're going to be okay. Most people are very understanding and forgiving because we've all screwed up and made mistakes. So, it's not fun, but you got to do it.
Yeah, there's one massive lesson right there, and you said it a couple times, is you have to communicate. You have to communicate with your investors. The second you start trying to hide things, the second you just say, I'll brush it under the rug because we will fix it internally and nobody will know, that's when things go bad. That's when investors lose trust in you. That's when they get upset with you not paying your distributions. But when you do exactly what Bruce did, when you tell the investors, look, I'm sorry, this is what's going on, and you're super honest with them and open to them, they're on your side. They understand it. And the vast majority, maybe one person gets upset, but you know what? They're going to be okay, because in the end, they realized you did as much work as you possibly could to make the issue go right. And you communicated well with them. You didn't hide anything.
Right.
Yeah. Bruce, what are a couple success habits that you have, maybe that you do every day or just kind of continually do? What are some success habits for you?
A lot. So one of the big things is Miracle Morning, Hal Elrod. It's that thing. It doesn't have to be exactly what he writes about in the book. If you haven't read the book, you should read the book, Miracle Morning. It can be a game changer, to sound a little hyperbolic about it, but have a routine for the morning. And then not just have a routine for the morning. What he talks about, and I'll probably butcher this a little bit, but take some time to meditate, to journal, get up and move around, get your blood flow going. Maybe just do some jumping jacks. Okay, I've got the mini trampoline in my office, which is called a rebounder. I saw it on Tony Robbins. I saw him do it before he goes out on stage. I thought, hey, I want to do that. So I've got that throughout the day. I'll get up and bounce for a little while. It's just to get that blood moving.
Yeah.
but that's the thing. And one of the things in my morning routine that's the most important for me, not just the journaling, but I heard this from Andy Frisella, a talk he gave at a 10X conference a few years ago. He called it his Power Five. But it's basically, okay, every day I wake up, there's things I have to get done. But I try to write down my top 3 to 5 or 6 things that I have to do today to move myself forward. That's it. Don't put down go to the gym, because you go to the gym every day. That's not fair. That's cheating, right? What are the things that I have to get done? Who do I need to talk to? What project do I need to complete or hand off or delegate? So if you just go into your day, sit down at your desk and just start going through email and reacting all day, it's going to be miserable. First of all, you're going to feel like you don't get anything done. And a lot of times you're not going to get much of anything done because you won't have focus. So I firmly believe if you will write those things down every single day, and maybe one thing has to bleed over from one day to the next because you didn't quite get to it, it's a way to make sure you're staying focused and on task. So that's a big one for me.
Yeah, for sure. I love the morning routine, the miracle morning. I don't probably follow, I shouldn't say probably, I don't really follow it to the miracle morning, but I have my own morning routine. I think that's critical for anybody, just getting the day started right, make sure you're focused completely. And then that top 3 to 5 things is super important too. Really having your rocks that you're going to make sure you get done that day.
Right.
This market's kind of crazy. And I don't ask this to most of my guests, but for some reason I'm compelled to ask you, what do you think about this market? Like, what are you guys doing right now in the real estate market and kind of, I don't know, let's talk market for a little bit.
I think the market is super strong. A lot of people think it's overheated. Maybe it is, maybe it isn't. Nobody really knows, right? Nobody really knows what's going to happen tomorrow, which is kind of funny because our job as sponsors and syndicators is to project out 10 years.
Yeah.
Like, guys, I don't even know what's going to happen tomorrow.
Yeah.
I have history, track record, experience to say, this is what's probably going to happen. And I can fairly confidently project out 10 years. But if you want the truth, they're projections. It's a pro forma. This is what I think will happen. I don't know. Nobody really knows. But so, I live in Austin. We invest in Central Texas and Tennessee, 2 very dynamic markets. But I don't see a stop in this for a while. We're not going through another 2007. That's not what's happening now. I just drew a blank here. We're starting, prices are getting away from us a little bit. Inflation is starting to really rage a little bit.
Yep.
But we've been through this before. We'll make it through this. I don't see cap rates expanding dramatically in the next 2 to 4 years. Yeah. I really don't. The Fed has said that they will probably raise rates 3 times next year and 3 the year after. You just read the latest CBRE 2022 report. They say, look, we think that interest rates will start to creep up, but we don't think it's going to have a direct correlation to cap rates for a while. So the first 1 to 3 might not have a huge impact on cap rates. And everybody's like, well, that's impossible. No, it's not impossible. Mm-mm. What people are trying to do when they're allocating money, big asset managers, big fund managers, they're trying to figure out, okay, where could I put my money and get the best return? And then they compare that to all the other asset classes they can invest in. The delta between what they can get in multifamily yield versus other asset classes right now is almost a historic high. So you've got a lot of gap there that we can afford interest rates to go up and not have to have cap rates go up too much. So it won't probably move at a 1-to-1 basis, because it's still going to be the best use of their money, the best place to put their money. And on a risk adjusted basis, commercial is really strong, but especially multifamily.
Yeah.
And then you look at Austin, Elon Musk is just coming. They're going to open up that gigafactory real soon. It's almost done. He announced that his headquarters it's coming from Fremont into Austin, into the gigafactory. We've got that going on. We've got, I think HP's coming, Samsung's coming, Facebook is adding more, Apple's adding more. We're growing like crazy. I was talking to Neil Bawa one day. He said, Bruce, why do you think cap rates can't go any lower? Like, Neil, how much lower can they go? Have you been watching San Francisco? Like, New York? I'm like, oh, He goes, anywhere outside of the US, they're
Right.
all at 2 caps.
That's the thing that I look at is when you look at these, here's what I think a lot of people forget or don't think about is that we think about our little bubble, right? We think about the markets we're in. We forget about San Francisco, New York, some of these other markets, but we also forget about Canada. We forget about pretty much all of Europe, forget about most of Asia. And these cap rates are next to zero in those countries. 2%, 3%, maybe if you're lucky. It's a global economy. People from Canada's our biggest investor in US real estate right now. You know, people from all over the world can invest in US real estate. They're competing in their own country for a 2 cap. When they come to our country and they see a 4 cap, holy cow, like that's amazing. They're getting double the value, right? We forget about that. We don't account for that.
Right. And what I talk to people about a lot right now, and I've been trying to, share this message a little bit, which surprises people, and we'll go into that too, maybe, but people are like, why are you sharing this information with me? I'm your competitor. Okay. Yeah, technically, I guess you are, but there's so much of this shit out there. I don't worry about you competing with me because I know most people that I share information with won't do anything with it. The other part of you that will, there's so much out there for all of us that get our piece. I'm not worried about it. But so what we've started doing, we've been operating in the 200 to 400 unit space for a while. Well, our last 2 purchases, we're going through a close right now on a 27 unit. And the close before that was a 48 unit. People are like, what are you doing? Well, I'm always looking for the hole in the market. I'm looking for the opportunity. And what I'm noticing, and it's been like this for a little while, but it seems to be getting worse and worse. Anything below 150 units, institutional money can't really play there. It's too small. Yep. It's like Warren Buffett. I can't buy a 2-cent stock. It doesn't move my needle at all, even if it, quadruples overnight. They can't really operate below 150 units for the most part. Mom and pop in today's market where I buy, they almost can't even afford anything above 20 units.
Yep.
So between 20 and 150, there's this sweet little pocket for me. The competition's not nearly as strong.
Yeah. They're
more difficult to run. I self-manage. Even if you don't self-manage, it's hard to find somebody willing to third-party manage a 27 unit without raping you. It's not, I shouldn't say it that way. They have to do what they have to do to run their business.
Yeah.
So they have a minimum that you just can't afford to pay.
And there's a lot less professional companies out there that
absolutely
are willing to manage a 42 unit building or whatever it might be.
Exactly.
They're okay when they get to that 200 unit building because now they can have staff on site, they can have a regional manager, all that kind of stuff. But when you get to that 42 unit building, we don't have staff. We don't want to manage that. So now you get the other companies that are trying to grow, but they're not yet quite professional.
Exactly. So, and I self-manage, so it's a little easier for me.
Yep.
But, where I've got a 200 unit right down the street from the 48 that I just bought, if I were to list that today, I got a BOV, a broker's opinion of value from one of my favorite brokers here locally. I said, what do you think I can get for it? He goes, well, I could sell it for 3.25 cap. I'm like, what? He said, yeah. Like, okay. I mean, I pay attention to the market, but that still surprised me.
Wow.
Because it's a C property. It's a C property in a D+ to a C- neighborhood. It's in a pretty rough pocket of Austin, Texas. And he said, Bruce, Austin is nuts. Well, okay, a 3.25. I just bought this 48 unit 4 months ago now, right down the street from it, about a mile and a half away. And I got it for over, what was it, like a 4.5 cap. No, it was a 5.39 cap on current with my grossed up taxes. Like, why don't I play in this little sandbox for a little longer? Yeah, it's a little harder for me as the management company to deal with it, but I'm the one that has to deal with that, and I'll figure it out.
Yep.
But yeah, the yield that I'm finding down there, the 27 unit that I'm buying right now, I'll talk about it because our cash raise is done. But an IRR on a 3-year hold for a 27 unit A-class property, 17. The average annualized return is projected to be 19. It's because
those are very attractive numbers for Austin.
especially for well, this one's
Right.
in San Antonio, but
Okay.
especially for an A
Even
property,
San Antonio.
an A property, it's a mid-rise elevator service, subterranean underground parking. I mean, it's fantastic. It was built as condos. I could, if I owned it now and it was running properly, it's not being managed properly right now. That's why I'm getting such a good deal on it. But I could probably sell it for a 3.5 cap. It's an A property in a strong submarket of San Antonio, which is a great market. So again, it just goes back to the 20 to 150 seems to be a special little pocket right there. I'd still rather own a 400 because as the manager of the management company, the owner, it's a lot easier to manage that 400 unit than it is a 27 unit, but my returns are dramatically higher on that 27.
Yeah. 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 That's an interesting thought. You don't hear too many people saying, I'm going to start buying smaller properties. But I do have a couple friends that's exactly what they're doing. They're focusing on smaller properties because of exactly what you just said. They're finding that there's a lot of mom and pops that own these properties that don't run them very professionally. And if they can come in, they can bring professional management and systems, actual true systems into the property. That 5.5 cap that they're able to buy it at turns into a 6, 7, 8, 9 whatever cap. That gets a major equity because they actually bring a professional operation to it.
Exactly.
Yeah. Awesome. All right, let's shift gears a little bit. I got a couple last questions. I want to be respectful of your time. What's a book that you can recommend to our listeners?
We talked about this earlier. I like to say something different than everybody. Richest Man in Babylon, Think and Grow Rich, Rich Dad Poor Dad. We all know about those, especially people that are watching or listening to you. I'm sure they're pretty sophisticated. One of the coolest ones that I've read recently is just random. It was Green Lights by Matthew McConaughey. It's a great book. I mean, he's such a phenomenal storyteller. And it just shows you anything's possible and take chances on yourself, believe in yourself. There's parables and there's messages in there. I don't read in fact, I don't read any direct real estate books at all. Yeah. Not at all. Another good one I think could help people, Killing Sacred Cows by a friend of mine, Garrett Gunderson. Incredibly good book. It helps poke holes in the dogma crap we've all been told and taught about finances, about jobs, about savings, about the banking system, about insurance. It's another really, really good one that I recommend to a lot of people.
Love it. Love it. It's a season of giving right now. I know you do a lot of things with educating and helping people out. What do you maybe like to do, or what are you doing to give back?
A lot of what I do directly is I just help as many people as I can. Yes, I have education. Yes, I have workshops that we teach, and we charge for that because it's a lot of work. Yeah. There's a lot of overhead for that kind of stuff. So I do charge for that stuff. But I had a guy call me one day. Well, he got time on my Calendly. He scheduled time on my calendar. We talked for a half hour. We get done. He says, "Man, look, why?" I'm like, "Why what?" He goes, "Why did you just give me a half hour of your time? Lord knows you're busy. And you gave me real actionable advice, not fluff advice to try to suck me into your system and charge me. You just told me what I needed to know to go do the things that I'm trying to do. Why did you do?" First of all, I don't mean to sound like a douchebag, but I'm kind of successful now. I've got a team. So first of all, I'm not doing the day-to-day hammer swinging anymore. I don't drive the nails myself. I have a staff of highly paid people that I have do that. But secondly, if I help you, it doesn't take from me. I think it helps me because I'm not a big spiritual person, but I do believe in karma. Like if I put lots of good out in the world, somehow directly or indirectly, it'll come back to me. And if it doesn't, I don't care, but it usually does. Yeah. And then thirdly, I said, this is very selfish and self-serving, right? But it's the truth. The more people I can teach to buy their time back, to own their schedule themselves, their calendar themselves, the more cool kids I get to play with. Mm-hmm. If I can help you not have to go to that cubicle job tomorrow or flipping burgers tomorrow, you have freedom of schedule now too. So now maybe we can go play golf together. Maybe we can go to Park City together. Yeah. So there is a selfish component to it too. That's how I give back the most, though. I try to just help anybody I can. I don't need to monetize every transaction. Other than that, we adopt families during Christmas. As far as gift giving, we help there. We've done school supply drives at some of our lower income properties. So we're always looking. I don't do a good enough job of it, right? I'll be honest. I'd like to give 10 to 20% of our gross income each year. I never hit that number because I get my head down and I'm busy working and I forget to look up sometimes. And wait, so we don't do as much as we should. But I've never put a monetary value on all the meetings and phone calls and lunches and all that, but that's how I give back the most for me.
Yeah, I mean, giving monetarily obviously is super helpful, but giving of your time is just as valuable. One of the reasons I ask that is because I've been consciously thinking about how I've been giving and feeling the same way. I've been falling short, and I want to see what are other people doing. What's everybody else doing? And it's been a decision. Like I'm trying to be very purposeful in 2022 to how I serve others and how I give to others. So that's the kind of the reason for that question. All right. So last question. What are your 3 pillars of wealth creation?
3 pillars of wealth creation. This will be esoteric probably, but just believe in yourself and take a chance on yourself. Don't listen to the shit around you. Most people around you are going to try to tear you down. Some people are going to do it subconsciously. They're not even going to realize they're consciously doing it, but you're going to get negative self-speak all the time. So tune those people out. Positive self-speak. I talked to a guy, I was in San Francisco a couple of months ago. I gave a talk about, I did a case study for people and tried to explain the virtues of investing primarily in real estate and multifamily. He comes up to me later and he says, "Hey man, I want to do what you do." I'm like, "Oh, great. Oh, how can I help?" I don't know. I'm getting started too late. He's 26. I don't have what my friends had when they started, and this didn't work for me. And I got to go. I was like, I got some news for you. He goes, "What's that?" "This is not going to work for you. You're going to be miserable for the rest of your life." He's like, "Well, how?" He was crushed. I'm like, "Dude, I should have recorded you.
Yeah.
Everything coming out of your mouth, you're telling yourself you can't do it. Right. So
Right.
there's no chance in hell you're ever going to do anything. Congratulations. And I hope you like this miserable life you're setting up for yourself. Get out of your own head. Surround yourself. It's the 5, it's that whole thing. You're the average of the 5 people you spend the most time with. Mm-hmm. If they aren't empowering you, lifting you up and driving you forward, walk away from them. Even if it's your family, still love your family, of course. But I've had to cleave family members, and dude, it sucks and it's painful and I cry over it, but you got to do it. You want to wallow in shit and self-pity and doubt? Oh, I mean, I can help you, but I am not coming down to the place you're playing. Not going to do it. So those are the 2 biggest things. And then third, it all kind of ties together in a way that I don't have a problem paying. And I'm not saying this because I want you to pay me. I don't want you to pay me when you're listening. I don't want to be your mentor. I don't want to be your coach. But I pay a lot of money to people to get as Gary Vaynerchuk says, to get as close to the sun as I can. I gave Garrett Gunderson, before I knew him, I gave him a lot of money. I got to spend a whole day with him at his cabin. I stayed overnight and we just brainstormed. I was willing to invest in me to get close to him. I gave Gary Vaynerchuk $10,000 to be in a room with him in his offices in New York. I gave Jeff Hoffman, the founder of Priceline.com, thousands of dollars to sit in a room with him in a small group to listen to what he had to share. Invest in yourself. And I know everybody says it, but damn, do it. I don't know how to drive that home strongly enough that we probably spend 10% of our gross each year on that kind of thing. Personal trainers, spiritual people in our lives, business coaches, life coaches. And even if I only pick one thing from what that person shared, if I gave Garrett Gunderson 25 grand and I only got one actionable thing, that one actionable thing, if I'll really do it, it's going to lead to hundreds, if not millions of dollars.
Yep.
So don't be afraid. The people all the time on Bigger Pockets and all these, oh, don't pay for education. It's all free. They're all scam artists. They're all guru bullshit people. Have fun going back to work at 7-Eleven, jackass. Wow. I'm not telling you to pay me, but why will you give Baylor or why will you give Stanford $250,000?
Right.
But you won't pay somebody that has a proven record of creating $1 million people. I don't understand that at all. It just makes no sense. So long-winded answer, I guess, and not very concise, but yeah, that's my thing. It's always putting back in you.
Yeah, 100%. And I think where a lot of the quote unquote gurus, or where people go, you don't pay anybody. It's because they didn't take action. They paid for, or they heard about somebody. A lot of it's, I heard about it. But, here's the thing is, if you're going to pay somebody to get their advice, first of all, be very serious and understand what you're paying for. Like you said at the beginning, like, all these people are out there telling you how you can succeed, which is great. But are you even cut out for it? Like, are you even going to take the action? Are you ready for it? And if you're not, why pay for it? That's what happens a lot. I think that's why a lot of these mentors get a bad name, is because they excite people. People aren't even qualified to be there.
Right.
They shouldn't be getting advice from them. And they pay, they get advice, and they do nothing. And then they go and wallow in their self-pity because they spent $20,000 on some mentor and they did nothing. And now they're drinking wine and crying in their bed sheets.
I gave a talk at a local real estate group in Houston, and I was at the front of the room, and, again, I'm just being real with everybody. That's kind of my brand, right? I'm just going to tell you the truth. I want to tell you what you might not want to hear, but I'm going to tell you the truth. So I'm at the front of the room and I said, look, I'm so tired of people giving me $20,000 to teach them how to do this. And I opened the whole thing up and I say, this is what you go. And then you don't go do anything with what I told you. And now I'm the bad guy. Well, how the hell does that work? I told you what to do. You're too scared to go do the things that I'm going to tell you to do, or you're too arrogant. Oh, no. Why are you paying somebody?
Yeah.
And you're not going to listen to them? Oh, I'm the best Slurpee maker in the history of 7-Eleven. I know what. No, you obviously don't know what you're doing because you're still working at 7-Eleven. Nothing wrong with working at 7-Eleven. Don't take me wrong. But you came to this person for a reason. Now you won't act upon this stuff they gave you because most of the time it's out of fear and nerves. But yeah, I think you're right that there is such a bad taste in people's mouths because they've heard bad things from people that didn't execute on what they were taught. But then honestly, let's be fair, in the 80s, 70s, there were a lot of charlatans out there, a ton of them, and many of them are or have been in prison because they were dishonest people. I think the industry has started to change. Most people like you, I was just at Jake and Gino, the Wheelbarrow Profits Multifamily Mastery. A lot of people are out there doing it the right way now. They're not slime balls. They're open. They're teaching you the right way with compassion and with transparency how to do this. Choose not to do it if you want. That's fine, but it's out there and people are willing to teach you.
Yeah, absolutely. Well, good stuff, Bruce. I mean, I think we could keep going for a while, but we got to wrap the show up eventually, right?
Yep.
So, man, how can our listeners get in touch with you, learn more about what you got going on?
So the big thing, apartmentguy.com, which is apt-guy.com. If you're interested in investing, you can set up a time to talk with one of my team to get you into the system. You can pick up the book. It's $20 to teach you how to syndicate if you think it's right for you. Or streetversity.com, which is where I sell all of my education. It's my educational website. So you can check things out there. We teach a lot of workshops. And then we have just a lot of digital content too. Or as again, I mentioned, Gary Vaynerchuk convinced me, you got to be on TikTok. I'm on TikTok. So you can find me on TikTok. And that's why I pulled it up earlier. It's Bruce APT-guy. It's Bruce APT Guy Petersen. So you can find me on TikTok. I'm giving away free content all the time, teaching you how to do it without any ask in return. So that's the best way to get a hold of me.
You're on TikTok. All right. All right.
I'm a 53-year-old dude. Everybody's like, what? I'm like, I'm not doing goofy 13-year-old trend dances.
Yeah.
My content is very dry, but it's very specific on this is how you do this. This is exactly what this means. This is how you get paid when you do a syndication. So I'm giving real advice.
Love it. Love it. Well, Bruce, again, thank you so much for joining us on the show. I learned a ton. Our listeners certainly got a lot of value out of this, so I really appreciate it. You have a fantastic rest of the day, man.
Same to you, brother. Thanks for having me on.
Hey, thanks so much for listening. I appreciate you being a loyal listener. Say, I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.